Hello everyone, this is the pre-market report video for today 16th August 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Since yesterday Indian stock market was on holiday, we got 2 days of information, so I tried to simplify and cover as much as possible, thus we get an informed decision. First, during the weekend, Chinese Central Bank released the report that banks in China issued the new loan value equivalent to just 48 billion US dollars for July month, which was 89% less compared to June month and also the lowest value since 2009. This macro showed that both people and industry in China, for one or the other reason, didn't opt for new loan despite very low interest rate. This made all the Asian market, especially Chinese and Hong Kong, significantly down. So this negatively affected our metal stocks. In addition, at that time, we had our own market problems such as low industrial growth data, increased CRR and FII huge selling on last Friday. All these made the Nifty super negative on Monday morning, but with the help of Reliance, IT stocks and to some extent a recovery in banks made it to close flat with positive bias. On Monday, the main dragger was HDFC Bank. Last week, HDFC Bank had their AGM. In that, HDFC Bank CEO mentioned that there will be a drop in upcoming bank's NIM net interest margin. And also he mentioned that HDFC Bank didn't get any exemption from RBI for CRR and SLR. So the general theory was HDFC Bank was down because of their CEO's statement. Here it may be, I'm not denying that, but my reservation was it's all already a known factor since earlier HDFC was just an housing loan finance company, so it's obvious their NIM will be very low and merging that with HDFC Bank will make the HDFC Bank NIM to look bad. So I think Monday's price movement was more with the Jefferies report release on bank's performance rather than their CEO statement. Just for info, if required, please pause and have a look. This was how much the profit increased year-on-year basis in all banks that in the Bank Nifty index. I took it from the Jefferies report. In that, they mentioned ICICI Bank and IndusInd Bank surpassed the estimate and posted very good numbers, whereas Kotak Bank and HDFC Bank missed the estimate. That's why on Monday, both ICICI and IndusInd Bank ended in green, whereas Kotak and HDFC Bank both ended in red. Anyway, enough about Monday's Indian market. Then after our market hours on Monday, Morgan Stanley released positive notes on Nvidia, which in turn made all the AI stocks in US to rally. Nvidia increased 7% and other chip maker Micron increased 6%. So basically Monday US market closed positive. Now coming to Tuesday, which is yesterday, China released their bunch of economic data. If required, please pause it and have a look. Their industrial production increased just 3.7%, where market expected over 4%. Similarly, retail sales increased just 2.5%, where market expected over 4%. And both the cases, the economic data were much worse than its previous month. Because of this not so good data, Chinese index closed negative and in turn decreased the oil price 1.5 to 2%. At the time of this video, WTI crude oil is trading around 81 US dollars per barrel and Brent crude oil was trading near 85 US dollars per barrel. Then regarding US market, I hope you guys know about the person called Michael Berry. He is very famous money market manager in US and there was a film about him called Big Short. It's a very good film. If you didn't watch means please go ahead and watch it. From that we can learn a lot. Basically he got the huge fan following in all over the finance world. Now his filing with SEC in US on Monday night revealed that he is holding a bearish options against S&P 500 and Nasdaq. So that's the first sentimental negative. Then second, before their market opening, US Census Bureau released the retail sales data. On year-on-year basis, the retail sales increased by 3.7%. It was higher than that of the previous month and forecast value, which was around 1.5% increase. This uneven huge increased retail sales data increased the inflation and so does the interest rate worries. All these made the US market significantly negative. At the end of the day, Dow Jones lost 1.02%, S&P 500 lost 1.16%, and Nasdaq decreased 1.14%. All this drama made the VIX to increase by over 10% and moved near 16.5 from below or around 15. So the takeaway, US market Monday closed positive, but last night closed more negative than Monday. Then about Indian ADR, first about IT stocks. Wipro Monday increased around 1%, but last night closed flat, whereas Infosys on Monday it increased 1%, and again last night it increased around 1.5%. So we can consider this as positive for IT. Now coming to banks, first ICICI on Monday closed approximately 1% negative, whereas last night decreased 0.5%, and in case of HDFC Bank it's even worse. On Monday it dropped around 1.5%, and last night it dropped another 1.75%. So clearly banks looking not good at all. About GIFT Nifty, today early morning it ended the trading at 19,474, which is kind of indicating relatively flat or 25 points negative gap down opening. So that's what happened in the global market. Now let's move to the India related info. First, I like to highlight for Reliance. On Monday night, Indian government again increased the windfall tax on crude oil from 4,250 rupees per ton to 7,100 rupees per ton. Here, this is clearly negative for Reliance, and in line with that, on Monday night, Reliance GDR closed negative in the global market. However, again Reliance announced that they are going to roll out 5G very soon ahead of their schedule. I mean, their original schedule is to roll out by end of 2023. Now they are saying it will be much sooner than this. In addition, Vodafone posted a very bad results. All these made Reliance GDR to close near 1.5% positive yesterday. So let's see in Indian market which got the upper hand, windfall tax negativity or Reliance Jio positive news. Second, on Monday evening, our Statistics Ministry released the India's July month inflation data, and the data came as 7.44% against expectation of around 6.5%, and it is way higher than June month's 4.87%. Here, consumer inflation mainly increased because of the food inflation, so this is negative for whole country, particularly for FMCG. Third, Infosys won another 1.5 billion euros worth of contract in Europe, and also we can see the impact in ADR. Other than this, there were a couple of negative news about both airline stock, Indigo and SpiceJet, so be cautious while trading on it. Regarding ITC quarterly results, their profit beats the analyst estimation, but their revenue didn't. Either way, nowadays it's a custom, all the large cap will fall on following day after the results. So let's see whether ITC defy those or not. As a summary, US market closed negative, so global momentum is not good, and for one or the other reason, banking stocks looks very vulnerable despite posting very good quarterly results, as both the ADRs closed negative on both days. Similarly, GIFT Nifty indicating the 30 points gap down today. On the positive side, Reliance and IT looks good, but in that Reliance got the windfall tax issue. Then about the things to look out, during the market hours, first at 11:30 am, UK inflation data is due. Then in the afternoon, Europe's GDP, industrial production and employment data are due. Then in the night, various US housing related macro and crude oil inventories are due, and very important, last FOMC meeting minutes is scheduled to release. Coming to technical, on Monday, after a reasonable decline, Nifty 50 took support near the 50-day exponential moving average 19,250 and recovered all the lost points. Thus, on the daily chart, it forms the high wave type candle pattern, which indicates a potential significant trend reversal to the upside. Whereas both daily and hourly momentum indicators suggesting a likely consolidation. So it's a mixed signal, and Nifty appears to be at a critical juncture. 50-day exponential moving average 19,250 is a pivotal point. A fall below will push the Nifty down to 19,100 to 19,000. Sustaining above 19,350, trend decider for day traders, we can aim for a target 19,500 to 19,600 level. Given the Nifty's ability to recover sharply from lows and close above crucial support level, which is above the upward sloping support trend line, made me convinced that the short-term positive seems plausible unless significant selling pressure which pushes Nifty below 19,250 level. Then in case of Bank Nifty, on daily basis, it forms a doji candlestick pattern after a sharp fall, which is indicating indecisiveness among buyers and sellers. In addition, both daily and hourly momentum indicators are indicating divergent signals, so more consolidation is highly likely. This is consistent with the fact that Bank Nifty has reached the 20-week moving average at 43,880, which often act as a strong support or resistance level. On Monday, it showed a strong resilience at 43,800 level, and also it managed to cut back some losses after falling to this day's low. Additionally, at present, substantial put writing at 44,000 suggests confidence in the support 43,800 level. So, like how 19,250 is the pivotal point in Nifty, for Bank Nifty it is 43,800 level. So below this might accelerate the selling pressure to 43,500. Then for positive scenario, a decisive close above the resistance at 44,500 would be a key level to watch, as it might indicate a potential for a reversal of the recent downtrend. Moving on, for Nifty, 19,300 got the maximum new put option, and also in overall it got the second maximum number after 19,400, since 19,400 got some significant call option open interest. As per open interest analysis, 19,300 is the support to look out for. Similarly, on the other side, 19,600 got the maximum nearby call option open interest, thus 19,600 is the resistance. So that's the expected trading range, 19,300 to 19,600. Then in case of Bank Nifty, 44,000 got the significant short straddle, so the next maximum put option open interest 43,800 is the support to look out for. 44,500 got the huge call option open interest, hence it's the immediate resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.